Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. As you can see, I am down for the first time since I started investing. My portfolio is right now down £500. About 3 months ago, I was up 8%, almost £4,000. Just beginning of this week, I was up 4%. No, 6%, £3,000 in profit. And right now I am down. So what's happening? What's happening is we are now officially in bear markets. Stocks have been absolutely going down in every single sector, every single stock in the S&P 500, the Nasdaq, the Dow Jones, every single way, the UK, every single country, in Europe or whatever, they are all going down. And we are now officially entered a bear market. So what is that? What does that even mean? What does that actually, what do we do? So it's been more red days in the last, since January, than probably green days, right? And we're looking at this and thinking, okay, people might start panicking and start selling their stocks and whatever, but we just need to step back and think about, what does that even mean? Like, all right, we're in a bear market, but what does that actually mean? How do we deal with this situation? Basically, bear markets is when stocks go down 20% or more. So the S&P 500 goes down 20% from this all-time high or more. And that's when we're in a bear market. Sometimes it takes very long time to recover from those kind of situations. So since 1929, this is what's happened. So 1929, the stock market was basically on bear market, 44%. It went down. That's basically the decline. And that took, so to come back from this lowest to this highest, whatever, it was 67 days. That's how long it took. In 1930s, was again the same, but this time it took longer, 250 days to recover. In 1930s, 32, almost 33% down, and it took 98 days. And you can see as we go along, some are very short, so again 90, some are quite long, 401 days it took in 1934 to 1935, whatever. Now, when you look at that, it doesn't give you, it just, you see that, and a lot of people will just straight away freak out. And you got every right to. But you have to then think about the bigger picture, So, if you are a long-term investor, and we're going to talk about some strategies in a second, you wouldn't have to worry about this too much. And I'll talk about that in a second, and I'll give you some strategies. But the shortest bear markets that we've had was the COVID situation. And that was about 30, almost 34% down, the S&P 500, and it only took 33 days. And some of us has actually only seen that. Some of us don't even realize that was a recession. But guess what? 33 days later, a month later, that we were fine. We were in basically a bull market, and everything was going to the moon. And that's when a lot of us entered the stock market. So if you haven't lived through through time, and if you started in the 90s, then you wouldn't, right now you'll be happy, because you've gone through the all sorts of recessions in the last whatever years. So when you look at in the 2000 dotcom bubble, it went down 47%. But guess what? The following years, the stocks kept going up and up and up. And then 2008, the credit crisis situation, the housing situation, because of that, the stock market went down about 50%. Again, we entered the bear markets. Then guess what happened after that? Everything was going to the moon and whatever. So since 2010 to 2020, so that's 10 years of basically the bull market. And that's what I mean. If you were around in the 90s, you've seen the dot-com bubble, then you've seen the early 2008, 2007, 9, basically the bear markets, then you would actually be fine, because you've lived through that and you know what it's like. And the 34% down or 35% down in 2020, and then back up again. So some of us genuinely have only seen this. Okay, just that bit there. Just keep going up and up. Crypto is going up. This is going up. DocuSign is going to the moon. Zooms are going to the moon. Teslas were like going about 10% every day. They were going up 10, 15% every single day. But now we came back down to earth, and that's where we are right now. Okay, so what do you do in these kind of situations? What is the strategy? How do we go about, we've seen this. We know history tells us that, we'll recover at some point. But what do we do right now? Should we panic and sell everything? Should we just hold? What do we do? So I'm going to give you some strategies. And again, I'm not a financial advisor. Okay, but this is what I'm doing. I'm down right now, as you saw in my portfolio, for the first time. Okay, like £500. So what is my plan? What am I doing? And what should you probably do in the long run? And that's the bit that we're going to talk about. If you like this kind of content and you're enjoying the videos, please subscribe to the channel. Okay, like the videos, it really helps. That's all I ask. Thank you. Let's now start looking at some strategies. Right, so the strategies are here. Okay, so the first one is do not panic. You've seen the market. It doesn't look great at all right now. And you've seen some of your stocks basically go down 5%, 10% on a daily basis. So what do you do in that kind of situation? Do you just sell? Do you buy more shares? Whatever you do, do not panic and think about the long-term strategy. Okay, you think about your own strategy. So that's step one. And genuinely, that's the most important part, because a friend of mine has actually bought. He had a bit of money recently, and he said, you know what? He sold his stock. He got a bit of money left, and then he bought more stocks without doing the research. And they were oil companies. They went down because of what Joe Biden said recently, went down about whatever. And he lost about £300. He actually sold it. I didn't know what he was telling me yesterday. It was like, oh, I've basically bought this and that, and then I sold it. I'm like, why would you do that? You need to have your own strategy. Don't panic sell. He was like, yeah, it kept going down 3 days in a row. And I was like, I wasn't sure what to do. So I just sold it because it was like a short trade. I'm like, no. Just think about the long term. Right now is not the time to basically do some trades, because you could lose a lot of money. Okay. What do you do next? The dollar cost averaging basically is your best friend. What I mean by that is every single month, every single week, however you want, okay, you just add a little bit more money to your portfolio. This will help you in the long run. Why? Because you're not just waiting for basically a bottom. So you basically dollar cost averaging. You're not trying to time the market basically. What you're doing is you're buying it when it's up, you're buying it when it's down, and in the long run, it will average it out. Okay, and that's really important. Okay, so you can't just wait. You can't just look at the stock market today and say, do you know what? Yesterday, oh yes, it was an ugly day. Tomorrow will be worse. I'm gonna wait. Okay. When you see an ugly day and you see companies that you like are basically going down, just buy a little bit of it. And then tomorrow, if they go down, just buy a little bit more of that. Okay. If you have the money, obviously. So the next thing we're going to talk about is diversifying your portfolio or your holdings. And this is really, really important. When I talk about diversifying, I'm not just saying just buy different random stocks. I'm saying diversify your portfolio by sectors. Think about sectors. We'll talk about in a second about sectors that will basically do well in recessions. But it's also important to know that basically you've got well diversified portfolio. You've got the technology sector, you've got healthcare, you've got consumer, you've got everywhere. Because if companies like the healthcare side of it, they're not going to go out of business during recessions, because we still need their product, consumer staples, the technologies, and so on. And really, I've highlighted this bit here, dividend stocks. Why? Because dividend during this time, right? You're not getting a lot of price appreciation. Your dollar cost averaging every single month, and you're not going to get any money back because you're not going to sell your stocks because they might be down. So what do? You get income. And that income to me, is really important. So I can reinvest that money and buy more shares of the companies that I like. So dividends are really important during recession time. Genuinely, I will say dividends are generally important in every market situation. Okay. But this situation, especially when we are down, right now I'm down £500, right? tomorrow I'll show you, in fact, what my graph looks like, my predicted income in the next couple of months. Okay, but I'm still getting paid. And guess what? I'm still getting increases as well from some of the companies. And I'll share that with you in a second. What am I doing with that money? That's money that I haven't had to work for, but I'm putting back to my portfolio and just try to buy more shares of the companies that I already have. So that is really important. The next one is invest in sectors that perform well in recessions. Because when we hit recessions, what that means is right now, everything is basically, the prices of the stuff that we used to buy is going up. Okay, because every single company is trying to increase their prices because they're trying to get some money back from companies. So what we need to do as investors as well is to invest in those companies that have a pricing power, that will do well in recession times. Okay, because not many people will go to, I don't know, places where it's basically their product is not a necessity. They might not go out as much as the people basically as they used to do. Okay, they're not going to go out to restaurants, and so you investing in restaurants and things like that is a luxury, right? It's those places. So you're not going to invest in those sectors. You're going to have to be careful. You're going to have to think about, okay, I'm going to buy consumer staples because that's household products that people need. Okay, children need diapers and all of that stuff. They need milk, whatever. So those are the type of companies that you should invest. Healthcare, I mentioned that earlier. A lot of us are getting old, okay? We're not getting any younger. We need those medications, right? So what happens? These companies still do well. Energy, right? We still need to keep our electricity and things like that, okay? So those are the companies that will do in the long run. And guess what? These companies actually pay dividends. So you get a bit of dividends and you invest in companies that are more defensive type, okay, during recession times and so on, and even in the bear markets, okay, and they do well. If in fact, Procter & Gamble the last few days has been really funny, but yeah, I did a video a couple of days ago and it actually kept going down and down, okay? So that is basically one of the companies that could potentially do well if we end up in recession because they have a pricing power and so on. The healthcare companies like your J&Js, your Pfizers, the Mercks, and those companies, their products, hospitals need those products still, okay? Next one is focus on the long run. I think this is the most important thing. Focusing on the long term helps you sleep well at night. Why? Because if you know the stock market goes up generally, okay, even if bear markets last, say, 3-4 years, and your time horizon is, we talked about time horizon. If you haven't watched that video, go and watch that video. If you time horizon, say, is 20 years from now. So in 20 years, what you want to do is retire. This money that you've actually invested right now, you're going to use that in 20 years. Whether you are basically doing FIRE, whether you are selling some of your stocks or basically you're living off your dividends, whatever it is, you need that money in 20 years. Why do you care what happens in the next 2-3 years? While the stocks are down and really cheap, some of them, okay, then buy more of these companies. So in 20 years, when you look back, you won't even remember that we had a recession in 2022. Okay, so that is the long-term goal, and that's what you need to think. That's what helps me genuinely, right? When I think about it, I'm like, do I really need this money right now? No. Okay, I don't need my dividends. I don't need to live off my dividends right now. I'm still working. I'm still young. I want to invest more while I have the time. And then when I get closer to hopefully retirement, okay, my portfolio will be, will pay me enough to live off. So that 20-year horizon, 10-year horizon, whatever it is, it's what helps you sleep well at night and focus on the long-term goal, okay? And that is genuinely the most important part. Lower your expenses. Right now, things are really bad, especially like look at the UK. If you drive to work every single day, you will be paying a lot, okay, just to fill up your tank every single day. Okay, we're talking about £2. I've never seen £2 basically per litre petrol in the UK, never ever. And this is ridiculous right now. Everything is going up. So what do? We stop going out. We start talking to our families, and just sit down as a family and say, you know what, this is now costing us more money. Let's cut this down. Let's cut that down and think about what you can do, okay, just to lower your expenses. I did a video a long time ago where we talked about lowering your expenses and all that stuff, okay, having a little bit of emergency money just in case and all of that stuff. So just go and watch that video if you haven't seen it yet. But it's really important to think about basically lowering your expenses. And finally, okay, the final thing I want to say about this is increase your income. Where possible, try to increase your income. Go and speak, if possible, if you work for a good company, okay, and they actually value your the fact that you're basically a colleague, whatever, then you should be able to increase that. Maybe speak to them about promotion, maybe start doing a side hustle, maybe do whatever it takes, okay. Try to increase your income. If your spouse doesn't work, maybe both of you now get a job, even if it's part-time, whatever it is, okay. Go online, teach English to basically Chinese students. A friend of mine does this. I think I've shared this before, okay, and they are happy with it. They get good basically money every single month, and they basically use that to live off on whatever. So just try to increase your income where possible, because remember, our expenses are going up, our income is staying the same. So what happens? We end up with nothing at the end of the month, and guess what we don't do then? We don't invest. And if you don't invest, you're kind of neglecting your long-term future. So it's really important to think about that, okay? And that is the things that I wanted. Those are the things that I want to share with you, because right now there's so much uncertainty. People are worried about what's going to happen to the stock market right now, not in the long run, okay? The long term, if you're thinking about the long term, then you will be buying, trust me, okay? If you see Microsoft down 20, 30, 40%, and you know nothing happened to Microsoft, the company is still the same, they're still printing cash like crazy, okay, they're still selling their products, the servers are needed, the Windows are needed, the clouds are still needed, the software they create, they buying other companies because they have so much cash lying around. Okay, come on, what are we doing? Okay, when we go to the supermarket and things are down, basically on sale, we buy everything. But when the stocks are on sale that can help you, have a better future, inshallah, in the long run, then what are we doing? So you have to genuinely think about that. Okay, one of the companies that I own in my portfolio is KLA. They have just approved, okay, that they will do 6 billion buybacks program and 24% rise in quarterly dividends. This is the reason why I love dividends, okay? This company is not going anywhere anytime soon. They have amazing cash flow, okay? They have profit margins that are great. They have a net income that is over $3 billion, okay? They are, when it comes to their revenue, they are growing their revenue. So total revenue is growing. The gross profit is growing. The EBITDA is growing. The free cash flow is growing. They pay absolutely amazing dividends, and they now increased that 24%. So every share of this company that you own, you get 4%, basically $4. And that's now increasing. Okay. Now they are down 32% from the 52-week high, and right now performing about 27%. Okay, basically for the year. Now they have a wide mode and all that stuff. The company itself, okay, sells basically testers products that are used in the semiconductor. Right now is a semiconductor on short. Basically, there's a shortage when it comes to the semiconductors right now, and for that reason, this company is not gonna go anywhere anytime soon. So buying a company like this on the discount right now, they are 22% discount according to Morningstar, 24%, 36%. And so on. Okay, so it's really important to think about the long run, to think about the companies that you own, and look at companies that are, for example, recession proof, if you like. Okay, so just think about your overall portfolio and think about these strategies. Don't panic, don't sell, just focus on the long run. That's all I wanted to say. That's what I wanted to share with you guys. I'm going to do a couple of more videos in the next couple of days. If you enjoyed the video and you lasted this long, let me know what you're doing. Okay, right now we're in a bear market situation. What are you doing? Are you buying? Are you selling? Are you just sitting on the side with cash? What is the plan? What are you doing? Let me know. It really helps me to understand the psychology of what's going on within our community. So it would be really nice to let me know if possible. Okay, have a wonderful day. Assalamu Alaikum.